The e-commerce property boom. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from Commercial Real Estate discussing the e-commerce boom and property banks are eyeing warehouses. Now remember earlier, or last year now, we're 2021, when Stocklands were divesting from some of their shopping centres. $1 billion worth. They'd already sold 500 million, and they were looking at getting rid of another 500 million. And they were moving heavily into logistics. Interesting, isn't it? So what do you think? Warehouses. Data centres, hospitals, and build-to-rent apartment blocks are the beacon of hope for institutional investors in real estate in 2021, after the sector's traditional trophy assets, major malls, and big city offices lost some of their luster through the disruption of last year. And once considered the most mundane of commercial property investments, the humble warehouse is now at the heart of institutional investment interest thanks to the online shopping surge, which has propelled demand for logistics space. In an exclusive roundtable convened by the Australian Financial Review, a group of the country's top real estate investment bankers have taken stock of the disruption and plotted their strategy through the coming year. From a business and marketing perspective, the impact of COVID-19 was brutal and swift, said Tim Church, a veteran banker who left UBS last year to take over as chairman of Morgan Stanley's local investment banking business. It has caused a significant and swift recalibration of real estate asset classes, the winner being industrial and logistics as the most preferred mainstream asset class for the foreseeable future. So, for retail investors, what would be some real estate investment trusts that you might consider that are targeting these? I know there were some we were looking at previously where they had offices not right in the heart, not the towers. They had the ones in a little bit further in the outer ring. You know, just that step down, but probably could be more suitable to someone who's working from home and just needs to go to a temporary office or just needs to get their team together. So, and despite initial alarm as the country shut down, another surprise winner in the big real estate reshuffle was the residential real estate market, according to Mr. Church. It has been one of the biggest beneficiaries of the synchronized support, exactly, from governments, regulators, and businesses. He said, well, isn't that the common playbook now? Whenever there's risk of a recession, or we've had a recession, a continued recession, there's stimulus put into housing. Underscoring the appetite for industrial assets, what may well become one of the year's largest floats is already taking shape on the desks of bankers at Morgan Stanley and JP Morgan. The property banking teams have a mandate from Blackstone to sell or list a multi-billion-dollar portfolio of Australian warehouses and industrial assets. The portfolio comprises more than 1 million square meters of space and more than 100 tenants. Under the dual-track process, the bankers are working on the merits of a $1 billion odd initial public offer or multi-billion-dollar sale. It's sweet timing for the US private equity giant as industrial and logistics shrugs off its previously staid reputation to become one of the best performing areas of real estate in the past year, through the demand generated from growth in e-commerce of food, clothing, and pharmaceutical supplies. Separately, there is no doubt that there will be an increased focus on exposure to alternative assets in Australia, which are very underrepresented when you compare us with other markets like the US, said Rahul Barra, Credit Suisse's head of real estate in the Asia Pacific. His peers agree. Once regarded as specialized, assets such as data centers, a sector that was also boosted by the surge in online activity during the shutdown, healthcare real estate, and build-to-rent developments are attracting increased amounts of institutional investment. Listed developer Mirvac was an early mover in build-to-rent with its project at Sydney's Olympic Park. But the sector is gaining rapid momentum. On the same day last month, the Financial Review reported rich listers Tim Gunner's ambition to create a $1 billion BTR development fund, and Canada's Oxford Properties plans for a $450 million Melbourne development. JP Morgan's Executive Director of Real Estate Investment Banking, Vali Anachalam, reckons there is a large amount of capital ready to be deployed into real estate. However, at this point, that capital is not chasing large shopping centres and to a lesser extent office towers, which both have more near-term leasing risk. This means that capital is being concentrated on a range of new alternative sectors. The pandemic proved that a number of the alternatives were highly resilient against the shocks to the economy. Another big trend likely to define the sector in the coming year is the sale and leaseback of large real estate portfolios. For institutional investors, such assets can deliver long-term, predictable and stable income, a particularly attractive proposition in a low-rate environment, according to Ben Connolly, Citi's Managing Director and Head of Real Estate for Australia and New Zealand. The uniqueness of the sale and leaseback product is that it is relevant for all industries and market participants, where that be listed or unlisted corporations or government agencies, he said. We expect all institutions that have real estate sitting on their balance sheet to assess capital management strategies over the coming years, of which sale and leaseback will be a viable and compelling option. So there we have it, everyone. Some interesting developments there in the e-commerce property boom. What do you think? Is it something that you are investing in or something that you would look at? Do you have any real estate investment trusts that you might keep in mind? Or do these public, new projects or public listings interest you? Let us know and leave your hints and tips in the comments below. Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I will see you all next time. Bye for now.